Good morning once again, and welcome to the Haven Financial Group radio show. I'm Larry Kolvig, founder and CEO of the Haven Financial Group. And we got Kyle Thomas on today, Kim. He's a certified financial planner on the investment team here at Haven, giving us a lot of discussions about emotions and the markets and the volatility and the tariffs, all this uplifting stuff. So we want to have as much fun with it as we can. Although it's serious, money can do weird things to people, and it has. And a lot of times, especially the calls we get when the volatility is here, is people just want to talk to somebody. And I had a good conversation with Kyle. He had a call in, and I said, "How did it go?" I think he was just listening. He was just having some ear that would listen and remind him that we did this plan. We're okay. Everything's going to be fine. And he was okay. And
Right.
for a lot of folks, that's what they're looking for.
Absolutely. And I can understand that. You just want to hear the person that you trust who's helped you put together a plan that we're still in the right places. And if not, Kyle, I'm sure then you start to walk through and help them readjust so that they are in the right places during these volatile times.
Yeah, I mean, traditionally, research has shown that in times of uncertainty, individual investors, they often shift from a higher risk strategy to lower risk ones, which, that can work out in your favor if you time it right, but it's also really hard to time it right.
Sure.
So having a well-rounded portfolio that's diversified properly should help prepare you for both those positive and negative market scenarios. It should help you capture potential gains during a strong market, and it should also protect your savings and unnecessary losses during any downturns. And the way you're able to do that is having a well-balanced portfolio that is fully diversified. I know we keep saying diversified, but it is important. That's what helps protect you there.
Yep, sure.
And you need to understand what your risk tolerance is and what kind of risk you can stomach in those downturns, because what you don't want is to change that risk profile in the middle of a downturn based on emotional feeling, because, well, now you can't recover as fast as you would have if you just kept in that same risk profile.
That's what you've just said, I think, is really, really important. It's the reason why now is the time to start to put this portfolio together, because you want to be prepared. You don't want to, on a day when the market loses 500 or 600 points, that's not the day you want to go in and say, "Oh gosh, I need to make changes."
Yeah, and there's a lot of different reasons for people sparking or having that fear sparked inside of them. A lot of it is based on the news or what they're seeing with the markets themselves.
Right.
The bull markets can create an overconfidence and people being more apt to buying those things that are already up because they don't want to miss out. And then bear markets can, do the opposite. They provoke a fear-based decision-making, and you sell at losses because you've already hurt a little bit in some losses and you don't want to hurt anymore. And the news just doesn't help with this. Any media, I mean, they create chaos, and, there's charts on these websites that say fear is driving the market, extreme fear is driving the market, or positivity is driving the market. And all those things play into investors' minds on a daily basis. And we see it in our meetings all the time. And when we're meeting with people and things that they come up with from doing their own research. And so many times they just need to be told, like, no, let's just stick with the course. We're going to be fine. We just have to stay with what we're doing and ride it out.
Are you guys finding that you're getting more calls right now than maybe you would on an average, March?
We tend to not get too many because we want to educate more on the front end. But yes, we are getting more calls when things are all, calm. The waters are calm and there's no volatility. We don't get any calls. Okay. But when it's been as volatile, we are getting weird calls as well. But those usually, again, we put on our counseling hat and go back to why we did what we did. The goal here is to buy low and sell high with market investments. Problem is, most people do the opposite of what they think they're going to do because of emotions. My encouragement would be stress test that portfolio. if you're listening and your portfolio is the same as it was when you were 20, 30, or 40 or 50 years old, and you didn't like the results when market corrections happened, but you haven't made any changes, can you not expect the same results when it happens again unless you do what? Make the necessary changes in your portfolio. I think of a nurse that was just in from Fairview Ridges. It was a couple months ago. And thankfully, at that time, the market was high. And she had come out to a class that I taught. And she came in and visited with us and then visited with me. And she was openly honest about, this, Larry, this investing stuff is not my deal. I just been putting it in my 403B, out of sight, out of mind. And to her credit, I told her she's done a great job. Then she goes, but I don't know what I've invested in. Can you take a look? And I took a look, and her whole 403B was in one stock.
Oh, boy.
That was a mess waiting to happen really quickly. Mm-hmm. She had no idea, and it was no fault of her own. She was openly honest. She was unaware. Well, thankfully, we fixed the problem, created the diversification we're talking about, and we were able to help her in that area. Timing was everything. The problem is timing isn't always what we want. And again, the element of time with retirees and retirement, that's what's so important.
Sure, absolutely. We've joked about this and I've said, don't watch news, go take a walk. And Kyle has just talked about, media issues as well. But what is your suggestion to people about how much they need to track this during these times? Do they need to be watching their investments every single day? What's a healthy way to handle things?
It depends on the person. It's a case-by-case basis thing, I think. But for your mental health, it's probably best to just maybe look at it on a monthly basis. Log in, check things out, and see what your accounts are doing. And if it warrants a discussion, that's good too, because we want to be an open book for people to have conversations about why we're doing what we're doing. Mm-hmm. And if they have questions about the market and the outlook, and that's all good stuff to be in the know about. But if you're someone who, has a lot of fear when they check their account, if it's down 2% or, they start seeing red for the whole week, it's probably not good to just be checking that, constantly. And it's just going to create, not the best thoughts and then panic inside of your emotions. So, it all depends, but be aware of how you are as an investor and what would be appropriate for you.
Yeah. And awareness and understanding is always important. I think back to 2008, not to dwell on such a terrible market correction, which it was, but we were all that much younger way back then, of course. Be careful for the advice that goes. I remember I went to Shar and Egan, her house, and she had come out to a class as well. And I said, are you losing money? Are you losing? She goes, well, I don't know, because my advisor told me not to open up my statements. Oh, and I didn't take her fully seriously until she brought out about a dozen envelopes that were not open because her advisor said, the market's way down. You don't want to look. Just don't open it. Well, I don't think that's really good advice. And I joke about it. She's been with me for years now. And she was just in for a quarterly review and we make some modification. I said, do you remember when she goes, yeah, I didn't open all those envelopes. That's not good advice.
No. Head in the sand doesn't work, does it?
Head in the sand. You don't have to be the expert, but make sure who you're working with, your partner, those that are working for you. And don't forget, they should be working for you, not themselves. Mm-hmm. They should be explaining it to the degree that it gives you some comfort and some understanding.
612-504-8400. Do you need that kind of partner? Give Haven Financial Group a call, or you can go to havenfinancialgroup.com. Kyle Thomas, it has been great to have you with us. Like always, your expertise is always so appreciated.
Oh, thank you. It's fun to be on.
And Larry, the final takeaway?
Yeah, it comes back to, do you have all the puzzle pieces? Do they go all to the same puzzle? Are they coordinated? Are they working together? And remember, it's tax season. Get your taxes done, but start the planning process. Estate planning, you've been putting off those wills and whatever else for years. Carrie and Anna and Keith are estate planning attorneys, whether it's investments or insurance, whatever it is. We do have all those people and personalities under the same roof, havenfinancialgroup.com. We appreciate you listening. Go to havenfinancialgroup.com or give us a call anytime to set up that appointment, 612-504-8400. Again, Kim, great to be with you, and we look forward to next week.